Hi, and welcome to our end of November update from the Wealthy Doctor Institute. Intelligent investing for the busy professional. We focus on simple battle-tested methods of investing that require just one adjustment each month to protect and build wealth. I'm David Ye, author of my book, The Busy Doctor's Investment Guide, How One Adjustment Per Month Can Save and Maintain Your Portfolio's Health. Although the strategies in this book are easy to calculate and adjust each month, for those of you who are new to the concepts in this book, or for those who are new to investing in general, this video will try to clarify what I do each month. If you follow along every month until you get the hang of it. So this month, what's covered? Rather than a question of the month, it's more of an announcement of the month because it's going to be an abbreviated video this time. We'll update the 20-month moving average system adjustment for this month. We'll update the MRI system adjustment. So the announcement of the month, this month's video is going to be abbreviated. It'll only cover this month's adjustment updates, and that's because this week it's RSNA week, the Radiologic Society of North America meeting. It's a huge radiology meeting that is held every year the week after Thanksgiving. And boy, it just keeps getting bigger and bigger. It's so huge, it takes up most of McCormick Place, which is like this huge convention center down in Chicago. Apparently we can't find convention centers anywhere else in the country to hold it. So during this busy week, of course, the last day of the month just happens to land on a Monday, so I'll get this out to you so that those of you who are following my signals know what I'm thinking when I'm making these calculations and adjustments. So let's get to it. We'll update the 20-month moving average and the MRI strategy. So the first system covered, and I emphasize system. In other words, again, I'm still getting questions mixing up systems. It might be helpful to keep one system in one account, another system in another account. But this system is the 20-month simple moving average system. The action is to stay in the S&P 500 index fund for this month. Now, the next slide, I'm going to bring up a slide of graphs. Now, I know that for some of you, when I bring up a slide of graphs, your eyes glaze over, you start to get lost. Just a warning. Some of you love how I show how I make these calculations. So for those of you who get squeamish with graphs, just fast forward. Meanwhile, here's a nitty-gritty. Here's a graph. The VFINX, which is the S&P 500 index fund that I use to calculate this, just ended at 192.61. The 20-month moving average is 185.46. Now if you notice, 192.61 is larger than 185.46. You can see on the graph it's higher. So that means it's relatively safe to be in stocks for this month. That's it. Next system. Again, this is a completely different system. Don't use a system. Use this system as a completely different account, preferably a retirement account. And it goes like this. It's the MRI, or the monthly rotation investment system. And here's what's going on. This month, sell 25% of the portfolio's worth of the inverse fund, and then use that to buy the S&P 500 index fund. Or, if you use a variant of the model, which had us 100% cash last month, use 50% of your account to buy the S&P 500 index. So, how does it look? The result now, we have roughly 25% inverse fund and 75% index fund, or because 1-to-1 inverse index cancels out and makes us effectively in cash, the portfolio is now 50% cash, 50% index fund. So again, next slide, I'm going to show how I got these numbers, but for those who are squeamish about graphs, you might want to fast forward ahead. So here it is, the numbers from last month, the last trading day of last month, last trading day of this month. The S&P 500 index fund climbed 0.29%. It's pretty flat. Then again, the inverse fund was also pretty flat, but lost 0.5%. The emerging markets fund actually lost 3%. So the clear winner this month is the S&P 500 index fund. That's why we're rotating 25% of our portfolio into the S&P 500 index fund. Now, I use VFINX to calculate. There are many S&P 500 index funds out there, and for some of you who are stuck with certain funds in your 401k or whatever, use whatever is the equivalent, or at least as close to equivalent as possible, to the S&P 500 index. So with the current model, last month we were 50% inverse, 50% index fund. If we were supposed to sell 25% of our portfolio of the inverse fund and buy the index fund, we would now be 25% inverse, 75% index. And because one inverse and one index cancels each other out, this is cash. See, this is cash, and this is index fund. Pretty simple, right? Basically, you went from all cash to 50% index fund. So, next system, again, is a completely different system. I only covered this one because some of you still want to invest in individual stocks. Here is one way to be sane about it. It's the 1% risk, 25% trailing stop system. I know, I should think of another snappy acronym for this, but it's something that traders know what it means as soon as you say it. So all it means is that you don't want to risk more than 1% of your portfolio on any one stock. And then you want to put a 25% trailing stop on that one stock that you own, making sure that that 25% of that stock isn't going to be worth more than 1% of your total portfolio. And I've gone over this in my book, I've gone over this in several other videos. I will make a separate video just detailing this because I know some people are still kind of iffy on this, so that's coming out. So in summary, for the 20-month moving average system, the system says to stay in the S&P 500 index fund for this month. For the MRI system, completely different system, completely different account, the system rotated 25% of our model portfolio into the index fund. And then for another completely different portfolio, another completely different account, if you're doing individual stocks, remember to monitor your individual stocks and make sure your stops are in place. That's what's protecting you. Or if your stops are actually at or higher than your last price, go ahead and buy more stock. So keep those questions coming. I know that I talk to several of you personally each month, but for those of you who have only heard about me indirectly, maybe you got a copy of this video forwarded to you by a well-meaning friend or colleague, here are ways to get in touch with me. Seriously, drop me a line, give me a call, email me to set up a consult. A few of you I've talked to, you know your stuff, you're fine. I don't have to worry about you. But for some of you others, holy cow, it's clear you need help getting your financial life in order. Don't be bashful reaching out for help. The more you delay, the more time is against you. So, until next month, invest safely